YouTube fam, Fat Man Zoom here. Hat's crooked. Let's straighten that out. All right, we're good. We're talking about Netflix earnings today. What the hell happened? Why is this stock going off when it misses earnings? We know earnings can be frustrated. We know it's a crapshoot, 50-50 gamble. We talk about it all the time. We also talk about typically companies beat. So how does Netflix miss earnings and still go up 17%? I needed to solve that. So I dug into the earnings call. I read the transcript, whatever transcript is. I read the transcript. I looked at the presentation and I figured it out. And it's not what you think it is. So before you go and tell me that they beat subs, that's not what it is. That was great, but that's not what it is. There's so much more in it. And after reviewing all that, it makes sense why it went off. Hopefully by the time I'm done with this video, it'll make sense to you. I'm going to break down exactly what they talked about fundamentally. At the end, we're going to look at it technically. We'll look at the chart, and I'll give you a prediction on where this stock is going to go. Hint, hint, it's not going to stop at 17%. So here's what you need to know about Netflix earnings. So we know that they missed. Their earnings per share missed, but they beat on revenue and they beat on subs. So they predicted 6 million subs, additions of subs quarter over quarter. For last quarter, they got 8.5 million. Awesome. We love that number. Don't know if that's surprising. Here's where we need to start though. Let's start with the miss. So we talk about how a company simply can't beat. You know, the market's forward looking. But they need to beat. They should beat. And I had mentioned, I basically put my reputation on the line and said that Netflix was going to beat. There was no doubt in my mind because they had missed 3 in a row. And how could they possibly miss 4? I was bearish on this company. A lot of things don't make sense, don't add up, people. But they did beat. However, they had a really good explanation. And so the justification was they had $258 million, I almost said billion, $1 million of an unrealized loss in euro debt. So basically, partially because of the weakening dollar, this number was a little bit higher and it was unexpected, but it was a one-time hit on the balance sheet, which usually doesn't hurt a stock that much. And that was really the only bearish news on Netflix. Let's talk about the key highlights. They hit a huge milestone. They passed the 200 million member mark. 200 million subscribers, people. Let's put that into context. Disney has 86 million. Now, before you tell me about, or Disney Plus, before you tell me about Disney Plus, I know it only came out in 2019, but they basically condensed 5 years over the course of essentially a year, year and a half. Total Disney Plus or Disney streaming services, which includes Hulu and ESPN, is 137 million. And I know it's close to that 200 million number, but I'm not worried about it. I like the growth. We'll look at that a little bit. I think they see continued growth, and they set a record for new subscribers last year at 37 million. So growth still looks really good, although it feels basically weak in comparison to Disney's massive growth. So remains to be seen, but I feel good about that key milestone. Average revenue per membership, which you would expect to be down, it should decrease as a company grows. It's up. Per customer, it was less than $9.88. It went to $11.02. That's huge. That's a huge number. It's supposed to be going down. Goes up. Great. Original content. This was the big thing. If you watch Brad and myself on the All in the Chaos channel, Brad has been huge on original content. They announced that most of their production is back up and running. They plan to release, they have 500 titles, over 500 titles in pre-production or ready to launch for 2021. They plan to release at least one movie title per week in 2021. This is nuts. They put the hammer down and they said, we are king of original content. If you forgot it, let me remind you. If you look at Google, 9 of the 10 shows that were searched on Google in 2020 were Netflix shows. 2 of the 10 movies searched were Netflix movies. Netflix is going to crush the movie space. They've made it clear that they're moving. That's the next step for them. They're moving into original production for movies. I think that's a smart step, and they're going to crush it. This time next year, look for them to dominate that space as well and continue domination in original TV shows. That looks great. Nothing wrong with that. But most production is back. This is great. All right. However, before I get into the single greatest reason, let me also say global expansion looks awesome. They tested out some new strategies in India. India is a huge growth story for them, but globally things look great. And their global content, I think, sets them apart from their competitors. But what is the single most important reason this stock moved? It's about the money, people. Financial outlook. You got that right. Here's what it is. No more debt. They're not going to be taking any more debt. They made it clear. Cash flow positive. So they're going to be break even for 2021. Beyond 2021, they predict to be cash flow positive. The market loves that. They alluded to the fact that they're going to start share buybacks. The market loves that. How can you not love that if you're a shareholder? They have $10 billion in cash. I love all that. Those financials look good. Now, let me actually show you in their press release some numbers, and you can look at them for yourself, and we'll check out just how good these things are. So here's what I'm looking at. This is their P&L statement. And let's look at these top 6 lines. So revenue, I want to look at the gray area, which is Q4 2020, but more importantly, I want to look at the forecast for 2021. This is in millions. So 7 billion in revenue looks great. Best quarter. If you look, I think that's going to be their biggest quarter. Year over year growth, 23%. We expect that to go down. I think as long as it's above 20, great. If that can come in at 25%, I love it. More importantly, it's above this 21% that Q4 had. Operating margin, operating income is what I got really excited about. So we have 1.78 billion in operating margin, almost double for Q4. So that's the forecast. Operating income. Operating margin is 25%. Beautiful number. The best one they had and the best one they will have had. Net income. Net income is what it's all about, people. If you invest in a company, net income, bottom line. What's the money coming to us, people? 1.35 billion. That number is stupid. It's almost 3 times the Q4. And the earnings per share is at $2.97. Please, Netflix, can you beat this time around? I'm going to put my name on this one. They do beat. They come in above $3 a share. Q4, $1.19. This just looks, this is all beautiful. So the last thing I want to just say is global streaming paid net additions. They projected again 6 million, which is what they projected for Q4. They came in at 8.5 billion. I think they're going to be conservative because in the call, they reiterated a lot. They feel really strong long-term, but short-term, there's a lot of questions. So I think they're being incredibly conservative. So I think another 8.5 million could be in order, specifically because of the global impact of it. So looking at the financials, I hope you can understand why I'm so excited. Here's another little thing they did that I'm not sure many people picked up on that I felt really good about. Their competition, they tackled their competitors head on. They talked about Disney Plus. They talked about HBO Max. They talked about Discovery actually in the call. They didn't talk about Prime, which is a little bit surprising because I've mentioned that Prime and their cash hoard is next up after Disney Plus as far as somebody I think they should be fearful of. But they talked about all those. And what they said was interesting. They said that we can all live together. And basically, they welcome the competition and it only makes them better. But what consumers have shown is they do have multiple streaming platforms. That's no surprise. We've talked about that. But I love how they didn't back down from that conversation and they're welcoming the competition. Competition makes us better. And so I think Netflix realizes that. I think they're open to it. And they did talk about how Disney Plus, there is a place for Disney Plus, but they have the opportunity to offer a lot more than Disney Plus. And you know what? I believe them. So lastly, let's look at the technicals. Let's see where we think this can go. So, man, my God. So, as of reporting earnings, we saw this was hovering around $500, right below $500. Tried to come up after earnings, didn't really do too much, sold off, um, but sold off at the beginning of the year. But if you look, it made that 17% move and it went up to all-time highs. So it was looking to break that 575. Now I think it's on its way to break that 600. I do think there's a likelihood that there'll be some profit taking. So if you're not in it, I think you should probably wait for some profit taking. I'm going to wait for it. But if you're in it, roll with this thing. If it pulls back a little bit, I wouldn't worry about it. I would potentially consider adding on. I think this thing easily could come back to 575. Realistically, this should, if it came back to 550, I would be looking for an opportunity to get in. If you guys see these yellow boxes, that's Don Fran from the Don Fran Show. Go check him out. These are his zones that he talks about. But I like that. Here's my price prediction. I believe that this stock should be at $750 by the end of the year. There have already been upgrades, $700 target range. I think there were 15 upgrades based on the earnings. That's huge. Let's keep this thing moving. But I think 700 is still conservative. I'm saying this is a $750 stock. Book it. Come back to me and hear what you say. With that being said, that's it, guys. I appreciate you coming by. Like and subscribe. If you guys want any other content ideas, earnings you want me to check out, put them in the comments. Give me your feedback. Check me out on the Chaos. I'm there every Sunday for Stock Watch Sunday at 7:30 p.m. Eastern time. That sounds right. See you guys. Peace.